Hi, and welcome to another episode of Nursing Your Way to Wealth, where a mental health nurse and an accountant talk about wealth creation, personal development, and financial independence in the UK to help you live the life you deserve. Hello, and welcome back. This is episode 36. You have both Alexes here again, and today's episode we've chosen to title Protect the Golden Goose. And if you're wondering, I am the golden goose, Alex is the golden goose, you yourself are also a golden goose because you earn yourself income. So today's episode is all about protecting against the unpredictable things in life. And we're going to talk about something that we feel is not often discussed, but it is really important to a good financial plan. It also helps reduce a little bit of anxiety and bring some inner peace. So we're going to cover this in four short parts. We're going to cover life insurance, income protection, critical illness cover, and also the importance of wills. And we're going to do them kind of in order. And what we'll try and do is do kind of 10 minutes on each and make them small, kind of short standalone bits that if you need to listen back to 10 minutes on income protection, for example, you can. And we'll ask our editor to timestamp those underneath as well for you. So, Alex, in terms of life cover, my understanding is it gives you a payout if you were to pass away. A lot of this will be around kind of death, ailments, just difficult things. So apologies if anything we say is a little bit difficult, perhaps a bit triggering. We have no idea what's going on for you in life right now. So if you need to pause, do so, take a breath, perhaps write some notes, but we're hoping it's helpful. So first up, we have life insurance. So taking an insurance policy to pay out should you or your spouse or someone in your family pass away.
Yeah, so and hi everybody, welcome back. And I think this is as Alex mentioned, is quite almost a bit of a um, hidden defense really in when it comes to financial planning. So you tend not to think about it because it inevitably leads to thinking quite about sad things. And life insurance is probably one of the saddest ones in a way that ultimately you would be paying out that you take out a policy if you were to pass away, a lump sum is then paid um, to whoever you want to that money to go to. I personally, so me and my partner have got a life insurance policy, and we've had that since we've had probably about maybe 5.5 years since we bought our property together, and with really the view of if anything were to happen to us, the life insurance policy would clear the mortgage and some to for the main reason being to just get the weight off the other person's to the survivor's shoulders and give that person time and space to kind of come to terms with what happened and grieve properly. I I found having that in place. So we pay about 32 pounds a month. And one thing which probably is a common theme with all these insurance policies is often they are like the premium, the amount that you pay every month is can be fixed for the term. So and usually the younger you are, the cheaper it is, and you can fix those premiums in for for life. But like for this policy, I mean, what I personally find is I feel a lot more comfort and knowing that this is there if anything were to happen. Um, and I guess as well, if your employer will probably have some policy in place as well, like a death in service type benefit, and that, and certainly both my employer and my partner's employer, those processes are there, but we didn't want to be in a position where you have to rely on a third party for something, especially when it's not in the third party's interest to really pay out. And I'm not saying that employers would renege on any negotiation, but I just think we wanted to have it in our control. It's our policy in our name, and we know it's definitely there. And then, in the unfortunate event that if something were to happen, and we also get the employer additional benefit, it's really helps with the process. I know, Alex, you've been looking at new policies recently with with an advisor. So be good to hear your thoughts on it.
Yeah, I think I have, which is why I kind of brought this to Alex earlier today, and I said, "Look, I'm kind of knee deep in the middle of this. What do you think about just putting some thoughts down and recording it?" I think there's a lot of power in having your own policy rather than just relying on an employer. I mean, anything could happen in life, which is why we're suggesting here you protect against the unpredictable stuff that goes on. There's a tendency to kind of other that in life that happens to other people that aren't me or my local kind of family or friendship network. It doesn't just happen to other people. It is possible. So I'd like people just to take a bit more inner peace and protect themselves, because the ideal time to buy something like this is when you don't need it, and I truly hope that you waste every penny you spend on it per month. And Alex, you're the same, and I hope I waste all the money I spend as well, because I don't want to have to claim on any of these policies. But should the worst thing happen, should something unpredictable happen, and I, for example, pass away and leave my wife and our dog and any children in the future, etc., I don't want to leave them in a hole. I'd like to know at least that I've made some form of provision to take some of the weight off of them like that. So I'm protecting myself and them as the golden goose, the earning person or people. Um, when you mentioned about employers, a lot of them have this death in service thing, and it sounds good on paper, and I like that it exists, but it is um, against your employer's kind of bottom line to be paying out a couple of multiples of your salary. So it might happen that, for example, you get, I don't know, hit by a bus and you're flat out dead, and that does pay out, no problem. You might find that it's a slow thing because you're very unlikely just to die on the spot. Um, you're more likely to spend a bit of time unwell and then maybe pass away. Who knows? Hospitals are fantastic now. You might find though that you're no longer employed by the company when that time comes around, and that's just another problem that you would have if you just relied on something like that. So, and also employers take out these policies to cover basics. We don't want people to have to live a bare bones existence, and it's a policy that serves many people. All of us are unique individuals. Like Alex, your situation was totally different to mine because we're different people. And if you have your own policy, you can work with a company, broker, or whatever to tailor the policy to exactly what you need. So, I originally I arranged this because a family member of mine had a stroke. They were older than me. They're kind of a relative, but I was like, actually, okay, this has kind of hit home for me a bit now. And the policy between that my wife and I have is enough to clear our remaining mortgage and give the other one an additional pot of cash to really take the weight off that. So we know that no one has to move homes. You can kind of have the time and the space you need to process something like that, because it's awful. Grieving is not nice. And the last thing I want my wife to have to do is to go out to work after 2 months because we're starting to get overdue letters through the door, etc. And the good thing around that is I've been able to stipulate exactly what I would need it to cover, and I can choose the amount. It's not chosen by someone else, so it's taking a little bit of power back and choosing exactly what you need. Um, and I'm hoping you never need it, but it's just something that helps me sleep better at night. And for an example, I think mine at the moment, I think I pay something like 24, 25 pounds. It's £24 something per month. And if you kind of divvy that up, it's, what is it, 6 or 7 cups of coffee, 5 pints, depending on where you go, half a bag of groceries. It's really not a lot in terms of the value it gives you should the worst case happen.
Yeah, I couldn't agree more. And I think we're similar in that we have a pot which covers the mortgage and some. And I think when we were chatting before the show, you made a really good point of because, and we both do the same in that we keep the amount of the benefit the same, but because over time you're paying down your mortgage, the person would be left with more over time because that mortgage balance is reduced. So, and we're the same. And I just think it's for me, I'm like you. I think it's really necessary, and I feel it's something in both of our controls. There's a phone number on it, and I know we get the money really quick if it happens. and it leaves the other person the time and the space to come to terms with what's happened and kind of create a new life, which is so much more valuable. And that is a really well spent 30 quid a month or whatever it is. Like it's yeah, the value is really outweighs the cost.
The cost, for sure. Like, imagine for a second, like that happens to, like, to me or my wife, and one of us passes away. I would be absolutely distraught. Naturally, I think anybody would. But having to kind of pick that up and like process all of that, and then have to think about, oh my god, I've got to go back to work and blah blah blah, etc. But it would make things a lot easier if you can make one phone call, probably do a little bit of paperwork and provide some proof, I guess. And then you get either a check through the post or you get a transfer of probably more money than you've ever seen in your bank account in one go. And actually, it takes a bit of that weight off. So if you need to say go on holiday away from your current environment and process it, you need to spend some time somewhere else. You want to go on a retreat or something, anything. It just means you have all of those extra options available to you. Not you're absolutely distraught. You're going through a grieving process. You can't solve your emotions. And at the same time, you have to go back to work and you can't afford any kind of counseling or therapy for it. I just think it's really a no brainer.
Yeah, completely. And as you said, what is it? A few pints of beer now.
Yeah, yeah, basically half. Yeah, whatever extra stuff you put in your supermarket trolley that catches your eyes, you're going round. Um, and I think that it doesn't cost an absolute fortune. And when I say my policy's 25 quid or whatever, that's not just the life cover. I think the life cover's about £7 of that. The rest of mine is made up of an income protection and another bit as well. So it's not it's really inexpensive. So if you just wanted a basic bare bones thing of if I die, my spouse gets 100, 200,000, half a million, £1 million, whatever, pick your figure. It's really not kind of catastrophically expensive. Like if you are struggling month to month, there are other things you can cut which provide less value, in my opinion, because as you said, Alex, the earlier you take it, the cheaper it is. You can't take out a policy when, like after the fact, you can't insure someone who's already gone. You can't cover yourself for an illness that you already have. So it's to protect against the uncertainty of life. And I feel like for me and other people, kind of thinking about how your brain works, our brains don't like uncertainty. We struggle to think about death and passing. And it's something that I think has eased a little kind of niggling thought in my mind of what happens if. And now I know what happens if this thing does happen, X and Y will happen, and the rest of my family will be okay. I mean, yes, they will be without me, but financially, they will be okay. Anything else you want to mention on life cover or life insurance?
No, I think that was, yeah, I think that's covered. I think in terms of where to buy it, I mean, I just used a comparison website. I think they all do it. Have a look across them and look at the different terms. That it's fairly accessible. I think these insurance policies. So yeah, there's nice and easy to get hold of.
Yeah, and you can always pick up the phone and speak to one of their advisors. I mean, they do this day in, day out. They're kind of the experts at it. Like we've said before, if you want accountancy, there's only one of us you're going to pick. It's not me. So use their brains, use their knowledge, and just ask them questions. You don't have to buy anything from them. Just say like, what does this term mean? What does that mean? And they can help you pick kind of the right policy. There are also loads of broker services as well that you can use. Um, Even just doing your own research. There'll be loads of info online about what each thing means and how to go about it. So long as it's kind of on your radar, I think. Okay, that's life insurance ticked. Income protection. So if you, in its basic form, and Alex, correct me if you can explain this better than me, but again, you are the golden goose. You bring in your income every month. It's your skill set, your efforts, your hours that bring in your salary that you use to maintain your life. If for whatever reason you can no longer work or do a job that's similar to the one you have, you can protect against that. So, say for example, well, here comes a bus analogy, but I get hit by a bus and I can't work for I don't know, 12 months while my bones heal and I get physio, etc., I can then, if I have an income protection policy, I will get obviously sick pay from my employer, etc., but that only runs for a short period of time. I think I get 6 months worth of sick pay from my employer at full pay, and then it reduces down. And say I'm out of work for 2 years, I then have 18 months of less income than I'm used to. So what this policy would do is replace that income for you if you can't earn it.
Yeah, I think that's the perfect definition.
Does it make sense?
Yeah, absolutely. I mean, I took out a policy the really when Amelia, my partner, was diagnosed with cancer. You almost see how fragile things can be, and luckily she's got a very supportive employer and she's very highly regarded. Um, but yeah, I was um, and through my employer, there's also benefits, which is I think 6 months full pay, but it's that other the rest of the time that you can't work. So yeah, I took out a policy which would then it in isolation would give me a good income, and then in combination with anything from my employer would be very, very good. And that's, I pay like £20 a month for that. And that's the premium is fixed until I'm 65, I think, or it might be 60. Um, and yeah, it's just another one of those things where it's, a pint of beer is like £8 now. And so to have,
Yeah, where you live.
yeah, well, it's true.
Yeah, it's probably six to be fair at my local,
Yeah,
right?
so let's call it for 3 pints of beer. That is, I know that I've got that peace of mind that if anything were to happen, I'm able to claim and yeah, maintain a salary.
Yeah, you guys can continue to live whilst doing whatever you need to be doing at the time and not having to worry about spending 40 plus hours a week grafting to earn a salary. You can focus on what actually is important and what actually matters. And I think it can supplement whatever your employer provides. And obviously all employers will provide different levels of things. I think if this is something that you're going to take some action on, and I really hope you do, be 100% clear on what you get from your employer. So ask your HR department, check your contract, make a note of these things, because if you speak to someone about buying an insurance policy, they will ask you all these things to tailor it to you. So if you have a year's worth of sick pay, there's no point you paying the extra premium for it to start after month 3. You can buy yourself the extra window, and if the risk to the insurer goes down, your premium, the cost goes down for you. So having these things in your head and like jotting them down will be incredibly helpful in sorting a fairly priced policy that's the right policy for you and your family should you need it.
Yeah, and that's a really good point actually. I was going to bring it up just around the mechanics of how the income protection works is you can decide whether to almost get it from day one or defer it. And yeah, the longer you defer it, the cheaper your costs because yeah, and I think with all insurance it helps to think of it from the foot of the from the insurance company. And essentially it's why the younger you are, you're less risk because it's very unlikely that you will die of something when you're young versus somebody that's 60 or 70. And so
Yeah, taking a policy at 20 costs a lot less than a policy at 50 or
absolutely.
60.
And so it's all about risk. Yeah.
Yeah, you'll get to the point where it's eye-wateringly expensive, and the insurers is like, actually, I just don't want to cover this, so I'm going to make it prohibitively expensive. And at that point, you'll probably just take your chances. If they're quoting you £900 a month for something, you're
Yeah.
probably like, well, I'll just bank that, right? And I won't bother.
Yeah.
So, yeah, the earlier the better. Is ideal. And just another thing I've thought of, like we always advocate emergency funds for people and just some extra spare cash should something like that happen. So you could even have an income protection policy start later than what a regular one would. So if you've got 6 months cover from your employer, you've got 6 months of emergency fund sitting there or more. You could use a little bit of that again to offset some of that. or you could take a slightly lower amount of income protection because you can supplement it from a fund somewhere else. So it just gives you extra options, and if it reduces your monthly outgoings, obviously that's a helpful thing. So note all of this down, have it around should you have that kind of conversation. And there's something else that when I spoke to one of the advisors the other day, he said you can claim on your income protection more than once. So I think the policy he's putting together for me, I can claim multiple times on it. So say I have I don't know, break my leg and I have some issues with it. So I claim on it once for a period of a year. Whilst it heals, I get physio, etc. And then later, if I have any further niggles or complications and I need an extended period of physio or something else needs to happen surgically, you can then claim on the same policy. It still stays active. It doesn't, it's not a use it and then you've lost it type thing. So it's they are quite broad and they're there to help you. Obviously, the insurer will make money on balance of risk. The amount of policies they take out, they're not going to pay out on every one of them. They go bankrupt. So they, in their risk tolerances, they would probably think something like, I don't know, 1 out of every 100 people might claim, and that's their kind of stuff that they figure out, and they'll have kind of actuarial tables and stuff to figure out kind of thing out. But I think I think it's just an important thing that could take the weight off of people. I mean, we hear stats all the time of some people in the UK live month to month, and if they miss one paycheck between a family, they're in real trouble. And if you do need to not work for a bit, 'cause you've got to focus on your health, something like this can really help. A friend of mine is a self-employed plumber, and he's a similar age to me, he's in his mid-30s, and he had some real bad nerve pain down the back, lower back and upper legs, kind of sciatica type pain. And anyone who's ever experienced that knows it's absolutely debilitating. And he had to take I think 3, 4 weeks off of work just whilst he got some physio and stretched every day. And he lost an awful lot of income, and he didn't have a policy like this. So he's worrying every day about not being able to work to support the rest of his family. And by the time you have a condition like that, and you mention it to like it gets brought up to your kind of life insurance people, the brokers, they're going to know that. They'll have access to your GP records. It's then too late to cover a condition like that.
Yeah.
It's past the point of being covered.
Yeah, that's a really good point. I think again, it's just that thing of trying to get it early, do it early, set it up. And as you said, I love that term. Like, I hope you waste all your money on it. Like, I hope you never ever have to claim it. It is there.
I genuinely hope that both you and
Yeah,
I waste all of the money we're giving to these companies, because I never want to have to claim it
yeah,
ever.
absolutely. And so, yeah, it's there for very much the edge case, but something that is possible. It may not be probable, but it's possible.
It'll be the only money that we waste, I think,
Yeah,
and good, and be happy that we've wasted it.
exactly.
Yeah. Okay. So that's income protection. Is there anything else you think of that we need to discuss, or are you happy with what we've covered?
No, I think that's good.
Cool. So next up, we have critical illness. So this one's a bit more expensive than the others generally because it's more probable. So what critical illness will do is cover whoever you're choosing to cover in the policy. In my case, it's myself and my wife, against kind of contracting or being diagnosed with any number of these critical illness conditions. And what that basically means is the insurance companies have a huge list of medical conditions that have been contracted by humans before. And if you get diagnosed with one or a few of any of these critical illnesses, and you get a proper full diagnosis from a consultant or your GP or a doctor, wherever, then that policy would pay out. It's more likely to happen, so it's more expensive, and it's something that covers. It doesn't cover like it's just basics, but it doesn't cover like coughs and colds, headaches, chest infection, etc. It's potentially life-threatening issues. So we're talking kind of forms of cancer, lifelong conditions that people might have, and it's something that like can perhaps be like a hereditary condition, or it can be something that's passed through genetics, something like that. If you need to be careful with kind of genetic things. So, for example, a member of my immediate family has a condition called multiple sclerosis. Um, I'm in no way covered for that because I'm genetically linked to it. It would be folly for the insurance company to cover that because I'm more likely to have it than another member of the kind of public who doesn't have that as a genetic link. So be mindful of that. But again, have talk to them about it. I've heard stories of people being diagnosed with things, having treatment on the NHS and curing it, but because they've had the diagnosis, that policy's paid out, and they've in receipt of, in some cases, hundreds of thousands of pounds.
Yeah, I mean, I have to be honest, I'm not, I don't have critical illness cover, but speaking to
Mm-hmm.
you now, I'm thinking it might be definitely worth getting. Uh, because did you then have to go through like a full, like, do you have to go through like a questionnaire with the broker? Is that how it would work?
So I don't know. So I don't have it right now. So when I set up my original policy, I didn't add critical illness because I wasn't earning that much at the time, and it was kind of a bit tighter at that point. But it's something that, like for an example, I've had couple of quotes from my most recent chat with the advisor. One of them for life cover and income protection. They're either 33 or 38 pounds as a broad example. Um, for that's a life insurance amount and income protection for myself and my wife separately. The critical illness element bumped those prices to about 60, 67 pounds, something like that. So it's more punchy in terms of cost. What I think will happen is they'll have access to your medical records for your GP. You'll have to answer a big old questionnaire about how healthy you are, whether you smoke, whether you're overweight, what your BMI is, what you do for a job, etc., etc. Um, but providing you don't do anything particularly dangerous, like as long as you're not a deep sea diver or
Yeah.
I don't know, whatever else is dangerous occupations like a shark feeder or something. I think it kind of depends on many things, and they'll take into account risk factors for stuff and how generally healthy you are. Um, but I think it's something that's certainly worth it. I read like a Reddit post the other day for someone who had like a form of melanoma, which is a skin cancer. Um, that was diagnosed, treated on the NHS and into remission, and he's now symptom free as far as the Reddit post said. And he got a check for 150 grand. And he said, "Well, I'm out of treatment now. I don't need anything more. I've got this money in my account. What do I do with it?" And people were just saying, "Well, invest it now. Like,
Yeah. Wow.
pay off some of your mortgage, go on a small holiday, etc., etc." So it's kind of something like that. It's stuff that you hope doesn't
Hmm.
happen to you, but if it does, it can allow you to to get. I mean, say one of us gets that in England or something, and the only treatment is somewhere in the US, and you're struggling to kind of afford something like that, and your critical illness policy gives you a check for 100 grand. You'd be like, well, I'll go then, and I'll have treatment, and I'll get that, and it becomes an option for you. Whereas before, you're kind of at the mercy of what. I mean, the NHS is fantastic; it can do a lot of things, but it has its limits. And in other countries, they have other kind of treatments that are available. So it just gives you the choice to be able to go and do that. Of course, you don't have to, but you could.
Yeah. And I think it's like a theme across all of these insurance policies is it's options that it gives people. And I think that's the real true value is you take a lot of stress away from a very stressful situation and you give yourself options and flexibility, which I think at times like these is like the values almost can't put an amount on it.
No, no, and I don't think you can really put an amount on it unless you've been there and been through it. And when life throws all this unpredictable stuff at you, it just gives you the choice. It can buy you some breathing space. It can buy you a treatment perhaps you can't access. It can give you the peace of mind that if something awful were to happen, that the rest of the people that are left behind will be taken care of. And I think it would certainly ease a lot of ill thoughts in my own mind if I was on that kind of trajectory. And it's that no amount of money can replace kind of that ease, that feeling of that peace of your mind. Yeah, that it can provide. So it's yeah, a bit more expensive, a bit more involved. So I would say, as a priority order, life insurance one, income protection two, depending on your job and what you need and what kind of um, emergency funds and your household outgoings, etc. you have, and whether you have any dependents as well who relies on you to pay bills, etc. And then I would say critical illness would be a nice to have thing as an addition. I would cover the basic fundamentals upon death and bringing in your monthly income, and then see what the critical illness would cover. If you can afford it, great, go for it. If not, reconsider perhaps kind of later in your career or yeah, something like that. Yeah, any other thoughts?
No, I think that's a really good summary. It's definitely got my cogs whirring, to be honest. Yeah.
Has it? Yeah, I've had one other thought, right? Just with critical illness that I had a conversation with the advisor the other day. Um, if you're a parent and you have young children, some of these policies can cover the kids as well for some particularly pertinent stuff. So it's difficult to cover a child, I think, below 18. I don't know if you can take a policy critical illness for children. Maybe that's a knowledge gap I have. But say a parent were to have a policy like that, there are some broad stuff that covers your direct descendants, your children as well. So yeah, that can be another thing that can help out if need be. But again, it's something to ask the question of the insurance company about and get specific details of what's covered, amounts that are covered, because it varies kind of from insurer to insurer. Okay, last up, how are we doing? 31 minutes. Okay, last up we have wills.
Yeah. So I hold my hands up. I don't have a will. I guess I'm fairly straightforward with my affairs in that everything just passes to my partner. So the part of the house, the ISAs, investments, pensions would all go to her. Um, and but I think what would be a will is on my to-do list, and definitely, yeah. And I think I'm sure in 8 minutes' time, I will be definitely more um, will have more urgency about doing it. But yeah, something I definitely need to do. I know they're super important, and yeah, it's definitely a gap for me personally. But I think where I think in the will, just be more specific around how to treat some of the money. And I think rather than, I mean, look, my partner's very aware financially, but it's almost some instructions around how things would be invested and where you could put it to um, kind of maximize it, and then also maybe think about charitable causes and other extended family. Um,
Yeah, I think I think it's worth noting with a will, something like that, that if you're married, things are a bit easier. Things are passed to the surviving spouse. If you're not, there's some extra kind of stuff like parental parents, next of kin, kind of siblings, etc., could lay claim to something of that. So if you've written it down and you say that this is my will of sound mind, etc., I would leave everything I own and have to one designated person, this person who lives at this address and this is her date of birth, etc. You can give that. You can't state what they would do with the money. So when I wrote mine, I left some of it to obviously a lot of it to my spouse, to my wife, some to my brother, and some to one of my closest friends. And I stipulated in the will what I'd like my pal to do with some of the money. And I got an email back from the solicitor saying, absolutely not, you can't tell him what to do, it's his. So I had to
oh, okay,
remove, yeah.
fair.
I was
I
just
didn't
like,
realize that.
actually, no, it's like, actually, pal, you do a bit of this, like we used to kind of do together, do go on a holiday and do that. Here's some extra for looking after my dog if she's still living, etc. Um, and yes, the solicitor was like, yeah, no, you can't do that. You would just give him the money and hope he does whatever you want with it. What you could do is discuss this with the people in advance,
Yeah.
and just say, look, I've included you in my will. It's, for example, this much money or this percentage of what I have. I can't obviously tell you what to do with it, but this is what I would like you to do with it should this happen. So that's an important thing. You can also include, I think, letters to each individual people or person. So, for example, if you want your spouse or your wife, your partner to do a particular thing, or you suggest that, because in reality, she could go to Vegas and put it all on black or red, and
Yes.
it's possible. I think unlikely. She's obviously very astute, but it's we can't dictate what happens at all. So I've just said like this is what I think you should do with it, but actually here it is. Do what you will. Um, so I think it's important to think about have conversations with people you're including. I know my wife's included her sister. I've included my own siblings in my one. And as life changes, like say, I don't know, say you have children, say your siblings have children, whatever, your decisions around that can change. So do, if you have a will, do get it out, dust it off, have a look at it. Is it still fit for purpose? Do you need to make some changes? Do you need to add someone somewhere, take somebody out, change some amount somewhere, um, and just really keep it kind of up to date with what you'd actually like to happen?
Yeah, that's really really solid advice because and I think, and probably myself included, I've seen like, oh, wills, you just write them when you're older. And I mean,
Yeah,
I, I know of my parents, my dad just has told me where it is. Don't know anything about it, whatever. I just know there's a location, and he did it probably about 20 years ago. And it's like, right, we've done the will, and it's located here. So, and that
the
was it.
end.
I was like, okay,
It's in this
fine.
color folder on the
Yeah, like
bookshelf.
literally that kind of thing. But yeah, that's definitely something I think it is important. Um, One thing which I am aware of my current soon to be extended family, formally, but the some people are better with money than others, and having somebody get a lump sum of, after a house sale, for example, would potentially put them in an early grave, given the amount of partying that would be done. I think and I don't know whether you can or you can't, but stipulating of getting the value, but have it in incremental amounts as opposed to here's a huge pot of money, almost have, one 24th every month for 2 years or something. Um, but I think that's where I come from. Like what my thoughts are is if somebody was to just be lumped a huge amount of money, potentially would or could almost be, you hear about the lottery winners where it goes completely awry. And I think we were chatting about Michael Carroll in a previous episode. I'm not saying it's that level of cash, but it's similar where if you suddenly have, £100,000 drop into your bank account and you're usually overdrawn, the effect on that person of having it. And I think that point of maybe educating and having that letter that you mentioned about intention and how you would deal with that money, I think would be super important in some situations.
Yeah, I agree. And I just kind of muted myself quick just to have a quick look to see if I could find the answer to that because there's a very big difference to getting a huge lump of cash in one go. Or is it possible to say, look, I've got this much cash, I'd like it paid as almost as if it's a salary over 2 years, 4 years, 10 years, whatever, whether that's actually doable. And I can't find an easy answer. So I think that would be certainly a question. Yeah, I don't know. I don't know if you can do that. We'll look it up and we'll figure it out before next week.
Yeah, we'll do that for next time. But I think it's just one of those, I guess, where if people listen to the podcast are very financially astute and potentially going to have large sums when they're older. It's I think making sure the recipients can actually deal with it. Um, and I know that I'd be super conscious of people's different like money personalities when it came to receiving a windfall. One thing I also would like to suggest with in terms of wills, and it's not um, directly related to you having one, but often I have heard people speculating about getting money from people's wills. I was like, oh, I'll inherit X amount from my parents, or I've got a rich auntie or rich uncle, and I'm gonna inherit X. I would, I mean, I can't stand that behavior of counting other people's money, but I would always suggest in your own financial planning that you never include what money you think you might receive from spouses, parents, in it. Because I hear it way too often. Um,
Yeah, you do, don't you? You see all over the place,
yeah,
like, I've got this much, I earn this much, I stand to inherit this much. And in the back of my mind, I'm like, anything can happen between then and like you expecting to get it. There's so many things. I mean, even taking into account the amount good quality care costs in later years, that can eat up an estate in 5 years, 6 years without trying too hard. You can be spending north of 50 grand a year on quality care for one of your parents, grandparents, etc. So, yeah, I wouldn't ever assume like I know I don't count it into my own financial plan in any way, shape, or form. If I do get anything like that, I'm probably going to be old enough to not need it, and it'll be passed down the generation, perhaps. I don't know, but yeah, I wouldn't say don't let that be your plan for retirement to inherit money off of people who have come before you.
yeah, 100%. Yeah,
And just to close the loop on the can you stipulate things with the will, just read a little bit from the Fidelity website. It says something about you can put it into a trust and you can earmark it for education or it to be paid in installments. So it sounds like that is doable. And there's a really nice thing on there that says even though those people might not be thinking long term, it shows that you've done the long term thinking for them. So if someone is quite young, money naive, life naive, and you drop a life changing amount of money into their hands without the proper education around managing it, it's very likely that a lot of that's going to get spent, or at least some of that's going to get spent on whims and kind of chasing dopamine, like we've discussed before. So I think it's a good idea to kind of use something like that, which is a trust, and pop it into something there, and um, then you can be more sure that actually it's going to go to the place that you agree with as well. Like it's helpful, like to cover education, to cover used house deposit, whatever you want to do with it, rather than just giving it all. Because I know I wouldn't have managed it well if I was probably less than 25. No way. I would have had a lot less to show for it. Might have had a shiny car, but it wouldn't have helped me build wealth for the long run.
yeah, completely.
Yeah, far too irresponsible.
Yeah, and that's it. And I like that. That's a nice phrase that about you. You've done the long-term thinking for them, and I think that's so true.
Yeah, yeah, definitely, definitely. Okay. In terms of wills, I mean, I only have it's a kind of a cheap thing. It's with a company called Fairwill. I mean, other companies are available, etc., etc. Fairwill don't know that Alex and I exist or have mentioned them. I mean, I have a policy with Fairwill for my will, but they might know I exist, but still. It's just a basic kind of online will that I can update whenever I wish. So I've taken it when I'm quite young. So I've been able to edit and add bits and change bits to that as we go. So it's something to look at. It's perhaps have a chat with them and just see what you think. And I feel an awful lot of peace having something like that, and it just protects my kind of my heart, my brain, some anxiety reducing, and it kind of calms my soul to know that I have some of those things in place so I can get on and concentrate on living life and doing as good as I can do. So, that, in our opinion, is those four topics in a nutshell. Hopefully, it's been helpful. Remember, you are the golden goose. You've earned the skills to have kind of to bring in an income. Think about what would happen if, like, imagine these scenarios and then see what you would like to happen and what would happen currently with the provision you have. If you think you need a little bit more or a tweak, please do that. Put it to the top of your to do list. I'm going to make sure Alex puts his will to the top of his to do list as well. But that is it. That's episode 36. Thank you for spending your time with us. Much appreciated. If you think any questions or anything around anything that we've said, drop us an email at nursingyourwaytowealth@gmail.com. Alex and I will read and respond personally to you. If you're an expert in the field as well and you want to come on, send us an email and we'll have a chat here and we'll dedicate another episode to it. But for now, take a breath. You're doing brilliantly. Take a little bit of time to rest, recharge. And if you need permission to rest because you're so busy, then you can have permission from me. Thank you very much, and we'll see you next time. None of what we discuss on the show is to be considered financial or health advice, and we recommend you always do your own research or consult an independent financial advisor or a doctor when making your financial or health decisions.